capital, expenses, and incomes. We discussed that assets are anything which the business owns, which gives or may give us future economic benefit. For liabilities, we discussed that these are obligations which the business needs to pay off. Capital is just the investment by the owners. Expenses are expenditures and incomes are incomes. And then we also discussed drawings and dividends. Now, we discussed that drawings are amount or goods taken by owners from the business for personal use. And for dividends, we discussed that this is the share of profit paid to the shareholders, right? Then we discussed that assets, liabilities, capital, expenses, incomes, and drawings or dividends. The treatment of these things, they can either be on the debit side or on the credit side. When assets increase, they are debited. When liabilities increase, they are credited. When capital increases, it is credited. When expenses increase, they are debited. And when incomes increase, they are credited. And drawings, when they increase, we debit them. And we also discussed the term which is nature. So nature is what is the treatment when there is an increase. So assets have a debit nature, liabilities have a credit nature, capital also has a credit nature, expenses have a debit nature, incomes have credit nature, and drawings and dividends have debit nature. Are you with me so far, Emily?
Yes, sir.
Yeah, so we did all of this yesterday. Okay. We also discussed what is the double entry system. Double entry system, the main components are the left side is the debit side. We also write that as DR. The right side is called the credit side, which we write as CR. We discussed that the debit side must always equal the credit side. And we also discussed that every transaction will have at least two effects. Yeah, so one other thing which we discussed yesterday was the accounting equation, which we discussed to be assets equals liabilities plus capital. We discussed that this right here is the debit side, and this right here is the credit side. And then we discussed that when it comes to capital, it is divided into ordinary share capital and retained earnings. And to get to retained earnings, what we do is we take our revenues, we subtract expenses from them, and then we subtract our dividends or our drawings, and we arrive at the value of retained earnings. Now, the reason why everything on this side has a credit nature, this except for expenses and dividends, is because we can see that expenses of dividends and dividends, both our drawings, have a negative sign with them. Hence, if they move it on this side, if they're moved on this side, the sign would turn positive. So that is the reason why we actually debit these. So this is the logic behind our conclusion that assets, expenses, and drawings or dividends have a debit nature, whereas liabilities, capital, and incomes, they have a credit nature. With me so far, Emily, all of this we did yesterday, just trying to recap.
Yes, sir.
Okay, good. And the last thing is we discussed how would we record journal entries, where we write the debit item, debit account name first, we write the amount in front, we write the credit amount name underneath, and we do leave a little bit of a gap. Account name, whatever it may be, we write it like this. Journal entry format. And we did some practice questions. Now, today we are going to discuss the accounts, which are also called ledgers. Now, as the name itself suggests, T accounts, this means that these accounts are basically made in the shape of a T. Left side is the credit side, the right side is the debit side, put a currency sign over on this side, write the date in front, and the account name in the middle on both sides. And here we write title, account, whatever it may be. And then we just post our entries. At the end of the day, we have to make sure that this debit side and this credit side is always equal. So this is the format. I think we also discussed this yesterday. You remember this, the T account format from yesterday's class? Or did we not do this?
No, we didn't.
We did it. All right. So now basically T accounts, these are basically formatting your journal entries into a more sophisticated, into a more consolidated sort of a format. There are certain rules around these, which we will discuss today, but essentially it is just formatting, nothing more. So let's just get into the examples right away so that we're able to properly understand these. Okay, so let's just say, okay, you are given the following transactions. And so the first one is business buys a car for cash for pounds 3,600. And the second one is the business sells goods on credit for pound 320. Number 3 is the business pays pound 68 in cash for advertisement. Then you have the business pays pound 190 as wages. And then the last one is the business buys goods for pound 197 on credit. All right, so Emily, you have a pen and paper with you, pen and page?
Okay.
Can you please make the journal entries for these 5 transactions,
Okay.
and then we can check if you're getting stuck anywhere. Emily, stuck anywhere?
No, sir, I'm still doing it.
Alright. So Emily, I'm just muting myself. You can let me know when you're done. All right.
Okay, sir. Sir?
Yeah. So you're done.
No, for the fourth transaction, what, like, there's only one account that's said that's been affected. What's the other one?
Sorry, which transaction?
The fourth one.
The fifth one.
No, fourth.
The fourth one. All right. All right. All right. So very good. So whenever any expense is being paid, and nothing is written, whether it is in cash or whatever, always assume it to be in cash. All right. So
Okay,
basically, the business is paying wages in cash. Always assume that.
okay, sir.
Okay.
Sure, I'm done.
All right. Okay. Just let me know what you've done. What did you do for the first transaction?
For the first one, I debited a car account and I credited cash account with 3,600.
Okay, perfect. 3,600. Okay, then for the second one, what did you do?
The second one, I debited trade receivables with 320 and credited sales with 320.
Very good. So sales you credited by 320 and you debited trade receivables by 320. Okay. For the third one?
I did advertisement debit 68 and cash credit 68.
Okay. Emily, two things to remember here, not just with this. In general, whenever you're recording transactions, it is a very good habit if you write this AC in front of the accounts. All right.
Okay.
So that's one. And number two, whenever you're writing expenses, right? For example, in this third transaction case, you're writing advertising. So write it as advertising expense. Write an exp in front, just so it is clear to the examiner. He or she knows that you actually know what you're doing, but they already know if you're debited something called advertising, it would be an expense, but it just gives a good impression about the student. All right. So always write expense in front. Okay,
Okay.
good. Then for number four, what did you do?
I debited wages account and I for 190 and I credited cash account for 190.
Left 190 and credited cash for 190. All right. And for the fifth one?
I debited purchase account 197 and credited trade payables account 197.
Perfect. All right. So you've done this perfectly. Now, okay. Okay, so one other thing to remember. Uh, Whenever you are doing sales or purchases or whatever, so there can be three things which can happen. All right. Sales or purchases. So you can either be told that they're on cash, in which case the other account would always be the cash account, or you can be told that they were on credit, like in our above examples. Or the third one is that a name could be given to you, like for example, Mr. Brown, right? So we sold goods amounting to, for example, £1,000 to Mr. Brown, or we purchased goods amounting to, let's say, £600 from Mr. Brown. Now, in that case, if in cash is not explicitly written, which it won't be whenever there is a name, there is a 99% chance that in cash will never be written. Always use the other account by the name of the creditor. Does that make sense? Or can we do a few examples for this?
Yes, sir. Yeah, we can.
Okay.
See, for
So
sales and purchase, do they ever pay by check or no?
sorry, I couldn't quite catch that.
Sorry, do they pay by check also or no?
Emily, your voice is I cannot quite understand. Sorry. Would you please repeat?
So do they also pay by check?
But your voice is very sort of convoluted. It is very spread out. I am not able to understand. Can you please write the question on the chat, or can you speak like really clearly? Because I don't know if there's an issue with the microphone or what it is.
Like, sir, can you hear me now?
Yeah, I heard the word now. That was clear. But
Oh, I was asking if that you can pay by check.
maybe it is. Can you please rejoin? Maybe I don't know what the issue is. Can you try rejoining? Yeah.
Can you hear me now?
Yeah, it is a little better, please.
I was asking if that you can pay by check also.
Sorry, Emily. Please, can you please write the question in the chat? Do you know how to get to the chat in Zoom?
Yeah.
Yeah, just please just send the question from there. Oh, all right, all right. So yes. Emily, this can be cash or bank. All right.
Yeah.
Yeah. So this transaction can be from cash or bank. Let's say that you were given a transaction. You can hear me fine, right?
Yes, sir.
Yeah. Let's say you were given a transaction stating that sold goods to Mr. Brown for pound 300. So in this case, the journal entry would be Mr. Brown is your trade receivable or account receivable. So you will debit Mr. Brown's account by 300 and you will credit the sales account by 300. Does this make sense?
Yes, sir.
Yeah. So however, if they explicitly told you that we sold goods to Mr. Brown for 300 pounds by bank or by cash. So in that case, always prefer this. But if nothing is given and the name of the receivable or the payable is given, always credit or debit the receivable or payable account. All right.
Okay.
Okay, good. So now let's talk T accounts. Okay, so the first step in making T accounts, whenever you get a full-fledged question which requires you to make the journal entries and then the T accounts. So the first step is that you make the journal entries. Once you have made the journal entries, then what you need to do is you need to identify all the unique accounts which are in your journal entries. For example, you look at the first one, there is the car account, there is a cash account. Both of these are unique. Then you move on, the receivable account is unique, the sales account is unique, the advertising expenses account is unique. However, the cash account, you already have that, right? So you only make one account for each title. So you won't make another cash account. Then another unique account is the wages account. Cash account has already been made. Then you have the purchases account, and then you have the trade payable account. So for this particular question, if we were to make the T accounts, you will make 1, 2, 3, 4, 5, 6, 7, and 8 accounts. Does this make sense?
Yeah.
Okay, good. So when we're making T accounts, so I'll make the cash account and then I'll only make the cash account for this one. You can try the other accounts on your own. Then as we're short on time, we'll get to an activity which I want to finish in this class. So that we can be done with this chapter and then you can practice at your own time. All right. Okay. So for cash accounts, Emily, the first thing, any account, for example, we're making the cash account in our case. So for cash account, the first thing that you need to do is you need to find the cash wherever cash is written in your journal entries. So you have this transaction which involves cash, then you have this transaction which involves cash, and this transaction which involves cash. That's it. So you have 3 transactions, right? So this is the first thing which you need to do. Once this is done, you get to the first transaction and you see that cash is on the credit side, right? If cash is on the credit side, you quickly go on the credit side of the account and then you write the amount there, which is 3600. Once you've done this, Then you look at what is making the cash go on the credit side. It is the car account. What is the account on the opposite side of the transaction? So you will write car here and you will write the date, whatever that date may be over here. So this is very basic. It is just formatting this journal entry into a different in a different way. That's pretty much what T accounts do. You look at the second transaction. In this transaction, cash is also being credited, which means that 68 you will write on the credit side. What is making the cash go on credit in this transaction? It is the advertising expense. You will write advertising expense here, and whatever date it may be, you will write over here. And then in the third transaction, cash is again being credited by 190. You will write it here. Wages expense is making it go credit. You will write wages expense here and the date here. Are we good with this?
Yes, sir.
Yeah. And finally, one other thing, Emily, what we do with T accounts is once all the transactions for any account you have posted them into the T accounts, what we do after that is we balance these T accounts. We sort of close these T accounts. Now, how do we do that? We make these three lines on each side of the account like this, and we total both sides. All right, we take the total, which is the larger one total. They will either be equal or one of them will be larger than the other one. You take the larger side. For example, in our case, it is this side, the credit side, 3600 plus 68 plus 190. Think this will be 3668 and 3858. I think 3600 plus 68 plus 190. Yeah, so you will write the total of the larger side on both sides, and then from this side you will name the balancing amount as balance carried down, and you will write whatever the difference there is on both sides, and then you will move it to the other side for the next accounting period. This is what balancing is. Any confusion in this?
No, sir.
No, you're clear?
No, yeah.
Okay, very good. So this is essentially what the accounts are. All right. Now we'll try to do one full-fledged question, and then you'll be good to do anything related to T accounts. And I would highly suggest that you do practice everything that there is, because you will have a week before our next class. So Emily, you do have the book, right? Uh, the accounting book with you. Do you have it?
Yeah, I do.
All right. Can you come on page 17 of the book? Sorry, page 16 of the book. 16.
Okay, got it.
You see the worked example over there?
Wait, sir, page 16 is not, it's like I think I have the new edition book.
Okay, so you have the new edition. Okay, so that's all right. That's all right. Just give me 1 second.
So do you want me to send the book to you, or?
So the book that I have is wait, just give me 1 second. Share it with you. All right, I am sharing the question. Emily, you have not been added to the WhatsApp group, right? The accounting WhatsApp group, or have you? Okay, I'll ask sir to add you to the group. In the meantime, you can just, I'm sharing the question on the screen and you can take the screenshot so that we're on the same page. Yes. Okay, so here we have it. So Emily, this is the question. Can you see it properly, the question?
Yeah.
All right, so this is what we're going to try to do in this class. And what I'm going to do here is make the ledger accounts directly. And later I would expect that you redo this question, or you can do another question, but I mean, this is activity number 4. I'll share activity number 5 or 6 with you, and you can try those questions at your end. But I would expect that you do make the journal entries first, and then you make the T accounts.
Okay, sir. Sir, is this
Okay.
an ES level textbook?
Yeah, sorry.
This is an ES and A level textbook?
You're asking about the book?
Yeah, is this an ES level one?
I'm not too sure, Emily. What I would first of all, I would ask sir to add you to the WhatsApp group. Then I would ask you to please share your book, a few images of your book with me, the front page and the info page of the book, which is the second or third page, and I'll see what sort of book you're using. I think it is the same AS level Excel book, but your edition may be different from mine.
Okay.
All right. So the question, Emily, do you have taken a screenshot of this? Because I will have to change the screen.
Yeah, I did.
Okay, good. So they're telling us that Akshay has set up his business and is preparing to commence trading in his sports goods store as from April 1 to 2019. Before he started to trade, he introduced capital of $30,000. This was by way of a check paid into the business on 25th March 2019. So the first account, it is by check. So we already get the idea. And by the way, when you make journal entries and you follow what we did here, the unique name thing, you will end up with the same accounts as well. So that is what I would expect you to do. But in our case, let us just begin with a bank account. Bank account, credit, debit, pound, and pound. So they're telling us that on 25th March 2019, he invested $30,000 into the business bank account, right? So the entry for that would be bank account debit and capital credit, right? And when we're posting that into the T account, the entry would become 25th March 2019, capital 30,000. Makes sense, Emily? But by far, do you understand how we're doing this?
Yeah.
Good. Then they're telling us on the same day he purchased a motor van and paid out 7,400 by check. So on the same day he had purchased a motor van for which he paid 7,400 by check. Again, it is through bank. By check, this means motor vehicle account will be debited, motor van, sorry, and the bank account will be credited. And so on the credit side, we will write 7,400 motor vehicle, and it is on the same day to 25th March 2019. After this, they tell us that in addition, he paid for shop fittings 2,900, purchases 7,100, and half the rent for April for the shop 2000. So all of this is on the same date. So we will write the same date here. Then we'll write rent was paid for 2000. He made purchases of 7100, and then he bought some fitting. I think he paid for shop fittings, yes, and shop fittings for 2900. After that, they are telling us 2000, yeah, all these payments were made by check, obviously, which is why we wrote them in the bank account. And then they're telling us that he purchased on credit goods for resale from Tennessee Limited for to the value of 3,400. Now this was on credit. This has nothing to do with our bank account, so we can just move on. Then they tell us that Akshay's business transactions for the first week in April 2019 are as follows. 1st April, he paid 150 to the local newspaper for an advertisement. So on 1st April, he paid by check. 1st April 2019, he paid his advertisement expense, and that was for 150. Next, they are telling us he paid £2,000 for the balance of rent due by check. Again, on 2nd April, 2019, he paid the rent amount for 2000, and after that, they're telling us that he sold goods for cash for 150. Now remember, this is not the bank account. This is not the cash account. This is the bank account. So we're going to just not look at the cash transactions. Then they're telling us again, sold goods for cash on 4th April, sold goods for cash for 5th April, 6th April. None of them is related to the bank account. Then purchase additional items from Tennis Limited on credit, and not relevant to us. Cash sales not relevant to us. Paid 120 wages to shop assistant, again in cash, not relevant to us. And on 7th April, they paid £600 cash into the bank. Now, they basically, this transaction is telling you that they had some cash lying around in their shop, for example, or in their register, for example, and then they took that cash from their business, from their shop, from their office, and they submitted or deposited that into the bank account, which means that their cash has decreased and their bank has increased. The transaction would be bank account debit, cash account credit, and the posting in the account would be on the debit side of the bank, 600 in cash on 7th April 2019. Are we clear so far, Emily? Any confusion in any? Okay,
No.
good. Okay, so we'll just balance this as we did for the last account. Because okay, so we need to be sure that every transaction related to the bank is done. Once this is done, we will just add all of this up, and this would become 71, 29. So this would be, okay, this side is less, so this is 30,600. This is also 30,600. The balance is coming on this side, which is 9050. So this is balance carried down, and the balance brought down will be on this side of the account for 9050. So is the balancing clear as well, Emily? Any questions there?
No, it's clear.
Okay, good. So once this account is done, then we can get to the other accounts, and we can just look at the bank account first and see what other accounts do we need. We will need to make a motor vehicle account, a rent account, a purchases account, a shop fitting account, advertisement account. Rent has already been made. We will need to make a capital account and a cash account. Okay, so we make all these. Let's make the rent account first. Rent account, credit, debit, pound. Now, again, we look at the question. and we try to see where have we paid rent. And now the rent has been paid once in the extract above the transactions, where they're telling us that on the same day he paid for half the rent for April for the shop, which was £2,000. And all these transactions were made through check, which means that rent expense was paid once via bank on, what date was it? It was 25th March 2019. It was paid for £2,000. And then again, they tell us that on 2nd April, again, through the bank account, £2,000 worth of rent was paid. Now, once this has been paid, 2,000, this would be balance carried down here, and this would be balance brought forward here. So once this is paid, we don't have any other transaction, so then we just close the rent account. After that, we have the purchases account. We open this up. Purchases, credit side, debit side, pound sign, pound sign. Over here, again, we look to the transactions and we see that on 20, again, purchases has a debit balance. So whenever they're increasing, we write that on the debit side. So 25th March 2019, we made purchases via bank, via check for 7,100. After that, we purchased goods on credit from Tennis Limited for 3,400. Again, it was on the same day, but over here we will not write accounts payable. Instead, as we have been given the name of the account, we'll just write the name of the account, Tennis Limited. Does this make sense, Emily?
Yes, sir.
Okay, very good. And 1,500, Tennis Limited, and the date the next transaction was 6th April 2019. All right, so Emily, as we're running out of time, do you have any confusion in any of the accounts or any of the concepts which we did today?
No,
Are
sir.
you good?
I'm good.
Okay, that's excellent. Emily, you can try to do this question completely if you want, but it's not a requirement for me. What I would require you to do is I will share with you one activity where the requirement is basically just asking you to create the ledger accounts, but please do also create the journal entries. All right, first create the journal entries and then make the ledger account.
Okay, sir.
Other than that, I will share some very, very small activities with you where you just have to fill in the blanks or do a little ticks and crosses. And that would hardly take you 10 to 15 minutes. The question might take you a little bit longer, but you do have a whole week before our next class, right?
Okay, sir.
And Emily, one other thing which I want to tell you is that the class that we will have on next Saturday may be moved forward by 1 hour, 1 hour or 1.5 hours. Okay, I have an urgent commitment to get to, but I will confirm this to you on Thursday or Friday.
Okay,
Would that
sir.
be all right?
Yeah, it's okay.
Okay. Perfect, Emily. So if you don't have any questions, we can wrap it up.
Yeah, thank you, sir. Bye.
Yeah, thank you so much for joining. Bye-bye.